This is The Asia Trade. I'm Avril in Singapore.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Asian stocks are set to fall as President Trump begins unveiling his latest trade threats, including a 25% tariff rate for Japan, South Korea and Malaysia, Treasury yields and the dollar gaining. But the president also formally extending the deadline for trade talks to August 1st as his team falls well short of promises for multiple deals by Wednesday. Plus, Samsung's second quarter operating profit misses estimates as it takes a hit from US rules on AI chips for China.
Let's take a look at how U.S. futures are shaping up, extending potentially these declines that we already saw on Wall Street, with mega cap leading those losses against the backdrop of these tariff letters flying around. And of course, the uncertainty surrounding U.S. policymaking still, given how there's a sort of extension to the August 1st deadline. Indeed, we're seeing that expression in the dollar, interestingly, a bit reversed, given a bit of strength seeping in. But this is mostly to do with emerging market currencies that have become hard hit in the past session or so. Unclear how long this bit of dollar strength will last when the dust settles. Indeed, we're seeing already the euro, single currency, climbing slightly against the greenback, against the backdrop of these reports that there's a US 10% tariff deal with the EU potentially in the works, keeping an eye on oil prices as well. OPEC believes that the market can absorb these supply hikes, which of course we got word of over the weekend, Haidi.
Take a look at how we're setting up in some of these Australian and sort of regional markets where we are expecting to see the biggest hit with this renewed tariff. The red light, Japan futures looking like this, a little bit softer as we get that really lack of progress when it comes to the trade talks with Japan, and the implications are going to be pretty strong, and we're expecting to see that decline in Japanese equities really to join the yen in moving lower. Tokyo investors kind of waking up to these higher tariff threats with the uncertainty just ongoing. When it comes to the yen, we saw that move of about 1% lower versus the dollar during the New York session overnight. Quite interesting that we're seeing this kind of revival of the US dollar, even with the haven demand of the yen still in play there. But we'll be watching that. We'll also be watching for perhaps a little bit more of a green shoot when it comes to Aussie stocks, given that we're expecting today being RBA decision day, that back-to-back cut from the Reserve Bank. But it is a trade front and centre. President Trump unveiling the first in a wave of promised letters that threaten to impose higher tariff rates on key trading partners. That includes that 25% on goods from Japan, South Korea and Malaysia. At the same time, he's also formally extended that deadline for new levies to August 1st. Our Bloomberg senior geoeconomics analyst Adam Farrar joins us now from Washington. Adam, really good to have you with us. And essentially the volatility sort of continues, right? But while the sort of hawkish nature of the threat is there is also the extension, which the president had previously said that wouldn't be needed and wouldn't be perhaps considered against, you know, sort of very different narrative that we heard from the Treasury Secretary.
Good morning. You're absolutely right. I think what we saw today was a variety of things, but the real takeaway is that extension, right, that the president actually signed through an executive order, moving the July 9th deadline over 3 weeks to August 1st. We did see 14 letters sent out today in what was appeared to be almost a random mix of key of countries. Obviously, we started with key trading partners, Korea and Japan, but then moved to other much smaller economies, including Laos and Bosnia and Herzegovina. And while, you know, we saw some fluctuation in those rates, including, 8 that actually received slightly lower rates, and 2 notably that received slightly higher, Japan and Malaysia, that went from there, up by about 1 percentage point. Overall, the story hasn't changed. In fact, the message is quite positive if you're a country that has been in negotiations and struggling in those negotiations, because instead of Wednesday being the deadline, all of a sudden you have more time to work with. So I think despite obvious concern in the markets and concern in capitals in the region, they're also waking up to more opportunity this morning.
That being said, Adam, we also know how some of these trade deals, they take years to negotiate. I mean, what difference is a couple of weeks extension likely to make?
So that's a great point. And I think that's honestly one of the big reasons we've seen the extension today is that the 90-day pause, the original claim of 90 deals in 90 days just ran up against the reality of the complexity of trade agreements. And I think we've seen that in no better place than the Japanese negotiations, which were hailed from the start as a likely first or in the first group of trade agreements, but has run into real trouble when it came down to agricultural imports into Japan of U.S. goods, including rice. And then, of course, this key question about sectoral tariffs, and in particular auto tariffs, which, with the auto industry in Japan making up over 10% of GDP. With all that in mind, I think you're right that formal trade agreements are well out of the question. But these broader general trade agreements that we've seen before could honestly come together in the coming weeks, similar to what we saw with Vietnam.
Very different to the narrative of sort of drastically reshaping the contours of global trade, right?
That's right. And I think we're going to have to see where things go. I do think it's important to highlight, though, that what we're seeing here also is the institutionalization of tariffs, right? These are not formal trade discussions as we've seen in the past, but rather, in many ways, tariff discussions that are locking in tariffs. The UK agreement locked them in at 10%. The Vietnamese agreement locked them in even higher at 20 or 40%. So, while, again, we're thinking a lot, it's easy to think of these as traditional FTA discussions, but that's simply not what we're seeing, and what has caused problems in capitals like New Delhi that have tried to approach this from a traditional perspective.
Adam, really great to get your insights. Adam Farah is Bloomberg Senior Geoeconomics Analyst for Asia Pacific. Now, we also want to talk about the market reaction. Let's bring in Garfield Reynolds, who leads our Markets Live Asia coverage. Garf, it's interesting the way the dollar has been reacting to these tariff letters and perhaps also Trump's threats on these countries that could align with BRICS nations. I mean, is it surprising to you that we see the dollar reversing higher? How long do you think this might last?
Yeah, well, it was a little bit surprising because ultimately the consensus has been that the US will suffer more economic damage than any other countries from imposing all these tariffs. Now, I think the uncertainty, the whiplash created by the threats and delays and then these announcements with the letters, that has all acted to reverse a little bit of the severe declines the dollar had suffered. You could argue that in the short term, there's more uncertainty about other currencies than there is about the US dollar, and the US dollar has had plenty of damage priced in. There's also the lingering concern that the damage from the tariffs to the US economy hasn't really come through. That's been one of the things that has been encouraging equity investors to look past any fresh levies, and has also been getting some people frustrated a bit at the Fed's unwillingness to cut interest rates because there's no apparent feed through into inflation. Now, that all may well still be coming, and it seems likely that it will be coming, which should mean over the longer term the US dollar will come back down and resume its declines. And indeed, we've already seen this morning with the report that the EU may end up with a 10% tariff rate with caveats. That sent the euro higher, at least initially, and it's taking developed market currencies with it. So the Bloomberg Dollar Spot Index is actually down modestly, a little bit less than 0.1%. This morning, you've got slight gains for the yen and the Aussie and Kiwi dollars in the wake of that euro strength. So that underscores that the US dollar remains vulnerable to declines, especially once you get the sort of fuller picture. Over the next few days, we should get to know who exactly has been threatened with what, and maybe there'll be a read on what the actual odds are for a proper deal. After all, at the moment, we still have 3 framework agreements, basically, best I can tell, with Vietnam and China and the UK. So are we going to get any more framework agreements, anything more that might indicate where you're actually going to end up with the tariffs, which means you can have a better read on what that means for the US economy, what that means for the global economy. There's also the potential hit to the US and global economy as we continue to get this high level of uncertainty. So it's a fragile outlook for assets in general, and I think especially for the dollar, because ultimately the US is the source of all this uncertainty that I've been talking about.
Difficult time for central banks, but does it sort of muddy the read-through when it comes to RBA expectations today?
I don't think so, because the RBA surprised last time round with how dovish it was, and part of its concern was what the trade war was going to do to Australia. Now, it's got a little bit of fresh evidence towards the idea that the inflation rate is coming down nicely. There are some signs of strain as well as strength within the labour market. There have been some poor retail sales data, but so with all of that, a cut looks pretty straightforward, and they might surprise a little bit by being more cautious this time than last time, because this is a meeting where they don't have a quarterly statement on monetary policy, so they're kind of going on old forecasts, and they might not want to front run their next bunch of forecasts. But with Monday's announcements out of the US and the idea that some of these tariffs really are going to come into force, and that this uncertainty has ramped up, I think the path for the RBA to cut is pretty clear, and I think the path of them to say that they're leaning towards further cuts down the road is also pretty clear.
Garth, thanks so much for sharing your analysis with us. Bloomberg's Garfield Reynolds. Now, one company in Asia that has seen an impact from U.S. policymaking as well, Samsung, as it's just posted its first profit drop since 2023 in its second quarter, blaming issues with inventory as well as U.S. chip curbs on China. Bloomberg tech correspondent Annabelle Jollers joins us now for more. Belle, a sharper loss in profit than expected. How bad is it exactly?
Yeah, these are numbers that really have come in a lot worse than what a lot of different analysts have been expecting ahead of them. So we don't, of course, get the sector breakdowns as yet, but the challenges are really here for the business, and we can see that. So operating profit coming in at 4.6 trillion won. That's around $3.3 billion US for the 3 months. The estimate had been for 6.18 trillion won. And if you look back to where we were a year ago, we're talking about a 60% drop. So again, a lot worse than analysts had been expecting. Sales came in at 74 trillion won. The estimate, again, undershooting those. It had been for 75.77 trillion won. Again, we will get those divisional breakdowns and a better reading on the net income, for instance, later in the month. But as I said, the company has flagged particular challenges for the semiconductor division, and we saw that as well. They said that the DS performance has dropped on inventory-related costs. So DS refers to the device solutions division, rather. It does include the memory business, and inventory losses can be affected by things like market demand, production scale, valuation losses, for instance, if memory prices are falling. But also challenges as well for the advanced semiconductors.
Yeah, of course, so much of the struggle has been with the HBM chips. Has there been any signalling in terms of progress being made on certification?
We did get some reading on this in a couple of different ways. The first we heard that the business, or Samsung, is saying that the US rules on AI chips for China has affected its earnings. So really, Samsung is one of the companies most affected by these US export restrictions on advanced semiconductors to China. It has become quite reliant on the Chinese market for chip revenue, and is a country where Samsung is selling some of its HBM chips. It's interesting, of course, Samsung having to find new markets for its HBM chips when it is lagging in those more advanced HBMs as well. So they are saying that improved HBM semiconductors are proceeding with client evaluation, but certainly we do know that they've been really struggling to regain their footing in this space, particularly for the 12-layer HBM3E, which we've been trying to get more details. What would the certification path be like from NVIDIA? But definitely we are looking for a bit of a drop. We've just actually had some signaling in pre-market that it's around a 2% drop so far, but we had seen options implying that we could see a one-day move of around 3.7%. So certainly we'll see further reaction when the markets open later this morning.
Bloomberg's Avril is there. Coming up next on the Asia trade, we'll continue that conversation when it comes to Samsung's earnings with Counterpoint. Regan Capital joins us to talk about these markets as President Trump sets out new tariff rates, but also the extension on that deadline. We'll also get the outlook for Australia's rare earth sector, the rare opportunity for Australia, given this ongoing battle between the US and China over rare earth materials. Queensland University will be with us on that. Plenty more ahead. This is Bloomberg. Brazilian President Lula da Silva has joined South Africa in blasting President Trump for his threat to slap extra tariffs against BRICS nations. Our managing editor for emerging markets in Latin America, Julia Lecce, has more on the BRICS Leaders Summit in Rio de Janeiro. Julia, great to have you with us. And, I was just musing for the notable absences that we've seen in this BRICS. It certainly has generated an outsized reaction.
That's very true. It was much quieter going into Sunday evening. And then we saw the Trump social media post, right, criticizing BRICS anti-American policies and threatening to slap the countries with 10% tariffs, extra tariffs on top of whatever rate he decides for these block of countries. And he didn't really explain what anti-American policies he was referring to or go into any detail on the tariffs. It was just seen as a response. The BRICS statement that came out on Sunday had some implied criticism of the U.S. It didn't mention the U.S. by name, but it did have criticism on unilateral tariffs. It criticized the strikes on Iran. And so this was seen as a response from Trump, a very strong response from Trump overnight to what the countries agreed to. And in the morning, what we saw was very much of a wait-and-see approach here in Rio. Everybody was quiet and not really wanting to comment on the social media post. And then South Africa first, and then Brazil came out and said, Ramaphosa was the first to break cover and criticize Trump for the tone of the comments. And then Lula, when asked later at a press conference, called the threat of tariffs on social media irresponsible. And that kind of set the tone for the rest of the day. And for the final day of the meeting, you have a lot of leaders already departing.
Julia, I'd just like your thoughts as well on the market reaction, particularly in EMs. Obviously, yesterday we saw them being hard hit. But, I mean, on the other side of the equation, you have the erosion of U.S. exceptionalism, the dollar slide. What are we seeing in totality?
So the first reaction, Monday was a pretty dire day for emerging markets, especially on the currency side. While you have been seeing, like you just said, the dollar retracing as investors move away from the U.S. with this, the theory that it's the end of the U.S. exceptionalism trade. On Monday, the dollar did bounce, either for tariffs coming into action, because during the day we also started seeing the letters with the tariffs starting to flow into the countries, right? We saw Japan, South Korea, South Africa during the day. And as the U.S. announced the new tariff rates, you started seeing that filter out into the market. So you saw the South Korean won slide about 1%, a little bit more for South Africa. And the tariffs we've seen so far from the emerging world anyway are largely very similar to the ones he announced in April. So the 90-day negotiation doesn't seem to have yielded much difference in that sense.
Julia, thanks very much for sharing your analysis with us. Bloomberg's Julia Leche. More ahead on the Asia trade. This is Bloomberg.
I need to tell my community and those families who are waiting, this will be a rough week. Primary search continues, and we remain hopeful every foot, every mile, every bend of the river.
That was the mayor of the Texas city of Kerrville, one of the areas hardest hit by the 4th of July floods. Officials have now confirmed that 27 children and counselors from a girls' summer camp were killed in the disaster. Across Texas, more than 100 people are reported dead. That number is set to climb even further as rescue and recovery operations continue. Our Bloomberg Texas Bureau Chief Julie Fine joins us now from Dallas, and obviously the world is saddened and really shocked by the images and news that continues to come out. Where are we at when it comes to rescue and I suppose now in a state of recovery operations? And is there any more insight into sort of how this played out without seemingly very much warning at all?
Well, I think the question is that they're really looking at now is there is warning. The question is, does the warning get to where it's supposed to go? The National Weather Service has gone through all their warnings that have gone out between Wednesday and Friday. There were warnings. The question is, did they get to the intended people? For example, in Texas, we have a lot of very bad weather. Therefore, people are inundated with alerts. So the question is whether people had turned their alerts off. Also, at 1 o'clock in the morning, you may not hear an alert go, especially at a summer camp where children do not have their cell phones. One thing that will have to be looked at is sirens on the river. Currently, there are not sirens on the river. That is something legislators are already discussing, including the lieutenant governor replacing. The Texas legislature will go back in session at the end of this month. That is certainly going to be on the agenda.
Julie, we've seen how U.S. officials have sort of pushed back against efforts to assign blame. I mean, how much, I guess, scrutiny is there for some form of change to the points you just alluded to?
There's definitely a lot of scrutiny. I will say, though, on both sides of the aisle, you see lawmakers in the state of Texas basically saying, we have to deal with this first. We have a search and rescue and recovery effort going on. They are focused on that. You have to understand currently in the state of Texas, you have state, local, and federal officials in this area trying to clean up debris, trying to make sure roads are passable, especially in a time when more bad weather is expected. So what will happen, we are hearing from officials, is this is something they will definitely have to take a look at. How to get these messages out, how to make sure they are received, and what local communities can do as well to make sure there is ample warning systems.
Bloomberg Texas Bureau Chief Julie Fine there will continue in the aftermath of that disaster. We're also hearing from President Trump commenting on this, saying that he'll be headed to Texas on Friday and they'll work together with Texas in the wake of these floods. In the meantime, he's speaking at the White House during the Monday night dinner with Benjamin Netanyahu, where he's participating in that dinner with the Israeli Prime Minister as these talks when it comes to the ceasefire continue. This is Bloomberg.
Maybe why don't I let you answer that question?
Mr. President,
wait a minute. Wait, he's got to answer the question.
I think President Trump had a brilliant vision. It's called free choice. You know, if people want to stay, they can stay. But if they want to leave, they should be able to leave. It shouldn't be a prison. It should be an open place and give people a free choice. We're working with the United States very closely about finding countries that will seek to realize what they always say, that they want to give the Palestinians a better future, and those who, and I think we're getting close to finding several countries, and I think this will give, again, the freedom to choose. Palestinians should have it. And I hope that we can secure it close by.
And we've had great cooperation from surrounding Israel, surrounding countries, great cooperation from every single one of them. So something good will happen. Brian, did you have something?
Mr. President, you've mentioned before you want to go down as your legacy as the peacemaker. Are we in the last chapter of closing out peace amongst this conflict now and all the other ones that you're working on?
Well, I hope so. Look, we did a job with India and Pakistan and Serbia, Kosovo, and Rwanda, and the Congo, and this was all over the last 3 weeks or so, Marco, right? We did, and others that were ready to fight, and we stopped a lot of fights. I think a very big one, frankly, a very, very big one was India and Pakistan, and we stopped that over trade. We're dealing with India and we're dealing with Pakistan, and we say we're not going to be dealing with you at all if you're going to fight. And they were maybe at a nuclear stage. They're both, nuclear powers. And I think stopping that was very important. We're trying to help out with a Biden-created monster, this whole thing that's happening with Russia and Ukraine. It's a horrible thing, and I'm not happy with President Putin at all. But this is something that would have never happened if I were president. This was a war that was never going to happen. Go ahead, Brian.
I was just going to say, how would you address your critics that in the election they said that you would cause the next World War III, when in fact you're solving all the problems?
I'm stopping wars. I'm stopping wars. And I hate to see people killed. Like, as an example, Ukraine and Russia, they're not Americans there being killed. They're not Israeli that are being killed. These are all Russians and all Ukrainians. But it's 5,000, maybe 7,000 last week, 7,500 last week, mostly soldiers. But people in towns and cities that are getting hit. But mostly death is mostly soldiers. Now, so they don't come from here, but it's 7,000 last week souls. And if I can stop that, they have parents and they have sisters and brothers and getting married and who knows, they're just people, but they're souls. And if I can stop a war, because I have an ability to do so, I'm disappointed, frankly, that President Putin hasn't stopped. I'm not happy about it either.
Mr. President, on the Iran talks, can you say if you scheduled the next round of Iran talks, and then also on strike?
We have scheduled Iran talks, and they want to talk. They took a big drubbing. I think when we hit the 3 sites, really, I would say the 3 sites, not just the one. The one was a big one, and it was deep in granite, and it was obliterated. It turned out the Atomic Energy Commission said it is obliterated. I would just want to take our hats off to those incredible flyers, the people that flew that big machine, and frankly, the mechanics and everybody else. I mean, they had zero. They flew for 37 hours with zero problem mechanically. I mean, when you think in carrying the biggest bombs ever, the biggest bombs that we've ever dropped on anybody, when you think non-nuclear, and we want to keep it non-nuclear, by the way. But they did a phenomenal job. It was an amazing job. And I think that was, I was talking to Bibi about it before, that was the very beginning of the end. It ended very quickly after that. I don't want to say what it reminded me of, but if you go back a long time ago, it reminded people of a certain other event. And Harry Truman's picture is now in the lobby, in a nice location in the lobby where it should have been, but that stopped a lot of fighting. And this stopped a lot of fighting. When that happened, it was a whole different ballgame.
On future Iran strikes, what might make you have the desire to do another strike on Iran?
Another what?
Another strike on Iran.
I hope we're not going to have to do that. I can't imagine wanting to do that. I can't imagine them wanting to do it. They want to meet. They want to meet. They want to work something out. No, they're different. They're very different now than they were 2 weeks ago.
Is there a date yet for the Iran talks, or a city? Do you know when and where the next round of Iran talks will be?
Well, I can tell you. I'd rather not say, but you'll be reading about it tomorrow or seeing it tomorrow.
Mr. President, what is the holdup currently in a ceasefire with Hamas?
In which?
In the ceasefire between Israel and Hamas, what's currently the holdup?
I don't think there is a holdup. I don't think there's a holdup. I think things are going along very well. They just, left each other, and it was not a pleasant period of a few days. It was a little longer than a few days, but this was not a pleasant period of time. And, we were, at the end, 14 missiles were shot, and every single missile was shot out of the air. It was pretty amazing. That was sort of the end. And they told us they were coming and where they were and what time they were coming. And they said, if you'd like to have a different time, we'll do that. And that's respect when they do that. I appreciated that they did that. There was no surprise. We got the soldiers out of the base in Qatar, in this case. But they knew they were coming. 14 missiles were coming. 1 o'clock, they said, would you like to make it later? I said, no, let them come at 1 o'clock. And at 1 o'clock, everybody was, as you know, over 5,000 people left the base. And we had 3 gunners and 3 assistants. And out of the 14 that were shot, all 14 were knocked down. And that was the end. That was about it. And we had a rough time, but sometimes you need the rough time in order to get. I think things are going to be really settled down a lot in the Middle East, and they respect us, and they respect Israel. They respect a lot of things that took place. Nobody's ever seen equipment like what we sent over to knock out those sites. But when those sites were knocked out, it essentially that was the end.
Do you think that there can be a two-state solution that creates an independent?
I don't know. I'd ask Bibi that question. You have the greatest man in the world to answer that age-old question, two-state. Go ahead. You give him your honest answer.
I think Palestinians should have all the powers to govern themselves, but none of the powers to threaten us. And that means that certain powers, like overall security, will always remain in our hands. Now, that is a fact. And no one in Israel will agree to anything else because we don't commit suicide. We want life, we cherish life for ourselves, for our neighbors. And I think we can work out a peace between us and the entire Middle East with President Trump's leadership. And by working together, I think we can establish a very, very broad peace that will include all our neighbors.
Mr. President, I have a question on Iran. You asserted that there's a complete and total destruction of their nuclear facilities. So what is the basis of the talks going forward? Is it to cap future nuclear activity? Is it ballistic missiles, terror support, economic-based opportunities? What are the...
It's really a good question, because if you remember when it was done, I sort of said, what's the purpose of talking? It's been knocked out completely. But they've requested a meeting, and I'm going to go to a meeting, and if we can put something down on paper, that will be fine. That'll be good. I think they've gained a lot of respect for us. I think they've gained a lot of respect for Israel also. But they would like to meet, and we're going to have a meeting. Steve, when is that meeting going to be? Do you want to say?
Rather, very quickly, in the next week or so.
So we'll see what happens. I think it would be nice to memorialize it, put it down, but because of the incredible result of that attack, if you want to call it an attack, I didn't think it was necessary to have it in writing. I think we spoke. I mean, that speaks much louder than writing. But I can also understand why they'd want it. And they've been very nice. They've been very respectful. And it began by them telling us about 14 they had to do. You know what 14 represents, right? Do you know what 14 represents? Right? You know that, right? The number of bombs dropped. So it was, representative. We got them all. Yeah, please. Behind you, please. No, you.
So this is a question for the Prime Minister. The likely next mayor of New York City is or on the Democratic Socialist, the local critic of Israel and of yourself, and has said he would arrest you if you came to New York City if he was mayor. Is that something you take seriously, or are you concerned about that? Do you have a response to that?
No, I'm not concerned about that.
I'll get him out.
Look, there's enough craziness in the world, but I guess it never ends. I mean, you have this is folly, and it's it's silly in many ways because it's just not serious. But what is serious is the question I was asked before. After October 7th, people said the Palestinians had a state, Hamas state in Gaza, and look what they did with it. They didn't build it up; they built down into bunkers, into terror tunnels, after which they massacred our people. raped our women, beheaded our men, invaded our cities and our towns and our kibbutzim, and did horrendous massacres, the kind of which we didn't see since World War II and the Nazis, the Holocaust. So people aren't likely to say, let's just give them another state. It'll be a platform to destroying Israel. We'll work out a peace with our Palestinian neighbors, those who don't want to destroy us, and we'll work out a peace in which our security, the sovereign power of security, always remains in our hands. Now, people will say it's not a complete state, it's not a state, it's not that. We don't care. You know, we vow never again. Never again is now. It's not going to happen again.
So we'll see you in New York next year?
Oh, well, look, I'm going to come there with the President Trump, and we'll see how do you know who the mayor will be? I don't know that. Do we know that?
He's going to be very fine, and who knows? We don't know who the mayor's going to be yet. But this is a communist. He's not a socialist. He's a communist. And he said some really bad things about Jewish people, and he said some really bad things about a lot of people. And I think he's going through a little bit of a honeymoon right now, but he might make it. But, you know, it all comes through the White House. He needs the money through the White House. He needs a lot. He's going to behave. He'll behave. He better behave. Otherwise, he's going to have big problems. But it's a philosophy that this country is not ready for, and it never will be. By the way, we have a man with us who thought this was going to be a very glamorous, easy job. He's the ambassador to Israel, Mike Huckabee. Former governor, former everything. I'd say he's a former everything, and respected and loved by everybody. And he loves Israel. He loves the state of Israel, and nobody loves it much more. And he's not Jewish, and he loves Israel. And he wanted to be there. I said, you know, Mike, it could be dangerous. No. Well, at least I was right about that. He was in every bunker you could be in. He was running around from bunker to bunker, but he's still with us, fortunately, and he's done a great job. Would you say a few words, Mike?
Just want to say what an honor it is to serve you, Mr. President, and to see a historic horizon that we're looking at in the Middle East. And when the President made his trip to the Middle East, and then he really reached out to the new Syrian government, knowing they needed the partner, and knowing that they could pick the wrong partner. And what the President did, which took us all off guard, but the strategic move in that has set up something that is absolutely historic. And Mr. President, I don't even think you fully comprehend the impact that you're having on the region in a way that is so remarkable. And it was your leadership, your foresight, you did that. When the B-2s went in, the celebration, the sense of partnership that you gave with the Israeli people was so dramatic. But the message was bigger than to Israel. It was a message to the world. America's friends can trust us, but America's foes had better fear us. And that is a message that the President sent to everyone on the planet. And it is a message that will resonate toward a matter of peace, the likes of which I don't think we've ever seen. So thank you.
Great job you're doing, too.
Thank you.
They love you over there. They respect him and they love him.
That's great.
You know, it's very, very interesting. We had the pilots here yesterday, as you know, and they were incredible. And we also had the mechanics. We had a lot of people here that had to do, a lot of people, I think about 170 people that had to do with that incredible journey, a journey that could have been horrible. You remember what happened with Jimmy Carter with the helicopters and all of the problems, and ultimately hostages. We had the exact opposite. Everything was perfect. It worked perfectly. But I think
And we'll leave it there. But as you can see US President Donald Trump there, plus Benjamin Netanyahu speaking in the middle of their dinner in Washington, D.C. at the White House, covering really a wide span of topics, including, of course, the ongoing discussions when it comes to the Gaza ceasefire. We've told that it's sort of progressing at this point. We did hear a little bit from Benjamin Netanyahu saying that they can establish a broad peace that includes their neighbours, saying that Palestine could have government but not necessarily security. President Trump saying the ceasefire between the two sides is going well, but declining to say when the Iran talks are scheduled for, saying he can't imagine doing another strike on Iran, and also some comments when it comes to Ukraine that he's not happy with President Putin at all, Avril.
Yeah, Heidi, and we've also heard him talking about how these tariff letters separately, that they are more or less firm, and that the August 1st deadline is 100% but not fully 100% firm. So there's a lack of clarity still when it comes to tariff policy. President Trump has told Japan, South Korea they'll face 25% tariffs beginning August 1st. Let's bring in Mireya Solís, Director of the Center for Asia Policy Studies at the Brookings Institution. Mireya, really good to have you on a day like that. As I just mentioned, there's really this still lack of clarity on U.S. tariff policy, kicking the can down the road. What is your sense of the calculus for Japan at this stage, especially given how August 1st will come after the upper house elections?
Thank you very much. Well, it's a very rude awakening. It's not a surprise. People already knew that the package deal was nowhere in sight, and that it was likely that the reciprocal tariff pause would be lifted. But as you mentioned, it turns out that this deadline continued to change over time. So it's not clear when and at what level the tariffs will finally be set. But the broader dynamic, I think there are two things that I would like to point out. One is that these trade negotiations have been taking place under the shadow of an important election in Japan. And we know that trade negotiations and elections don't mix well. And that has made it very hard for Prime Minister Ishiba to find that package, particularly when it comes to agricultural concessions that the Trump administration seems to want. So perhaps after the upper house election, some of these political constraints will be lifted, but it all depends on the outcome. And even then, that would leave a very little amount of time from July 20th through August 1st to try to find that path. But the second broader issue, I think, is that we're coming to the rude awakening that even despite all the contributions that Japanese companies make to the U.S. economy, despite the fact that Japan is the #1 investor in the United States, a strong security ally, close partner when it comes to de-risking from China, nevertheless, that has not been sufficient to move the Trump administration when it comes to the auto tariffs. And again, automobiles, a key pillar of the Japanese economy. And as long as the Trump administration does not show some flexibility when it comes to perhaps a tariff rate quota on autos or something that eases the pain that Japanese car companies are feeling, that's going to be very difficult for Prime Minister Ishiba to go back to his own public and say, mission accomplished, we got a deal that works for us. Last point, I think these tariff negotiations very hard because you never know what's coming next. And President Trump keeps talking about raising tariffs, modifying the tariff schedule. So it's very difficult to think that we have landed on anything that's going to have a long life shelf.
Mireya, and I do wonder, you've sort of touched upon the uncertainty when it comes to this long-standing security and diplomatic alliance. Do you think a failure to get to the same page when it comes to trade potentially impacts negatively those other factors?
Well, I do think so. I mean, it's very hard to talk about close partnership with your ally when you're going to be receiving a major economic shock from these tariffs. And, the tariffs that were announced on April 2nd of 24%, they're actually at 25%. And at that time, from April, there were a number of estimates that this is actually going to have a very negative impact on the Japanese economy. So I do believe that, first of all, it's hard to keep that strong cohesion when you're reeling from the fact that the tariffs from your ally partner are bringing such an economic damage to your own industries. Second point is that the agenda gets crowded out with these divisive issues, right? We're talking about defense expenditures, we're talking about tariff levels, when in fact the U.S.-Japan could use more productively their time thinking about longer-term challenges and opportunities when it comes to de-risking from China, when it comes to technological cooperation and things of this nature. So I think it's a wasted opportunity, but also I think it brings now trade friction to the U.S.-Japan alliance in a way that we thought that it was not going to have a replay.
When it comes to the U.S.-Japan alliance, it's also interesting that sort of leverage that Japan might have when it comes to holding U.S. treasuries. Do you think it might wield this in some way in the path of negotiations ahead?
I sincerely doubt that Japan may use that card because, there would be broader financial consequences. And I think that we're already at a moment of great uncertainty in the world economy where financial markets have acted up in very concerning ways. So for Japan to hint at the use of that card, I think that Japan would also suffer from the consequences of this potential turmoil. And it would also probably trigger a very harsh response from the United States. If anything, the Japanese approach has been distinctive for trying to find a negotiated path from not threatening retaliation. Japan has not even brought, a case to the WTO, has not complained to the WTO really about the Trump tariffs. That may be a way in which you would use multilateral trade rules without triggering financial turmoil that the Japanese economy would also be affected by.
Mireya, what are the options for Japan when it comes to diversifying trade?
Well, Japan has many options in the sense that it has been establishing trade agreements with countries in Asia, but also with Europe. And, there are these mega trade agreements, the Regional Comprehensive Economic Partnership, and more especially, there is a comprehensive and progressive Trans-Pacific Partnership trade agreement. So I think that the situation is how do you invest further in the growth, in the deepening, particularly of what is a crown jewel of Japan's trade diplomacy, the CPTPP. There have been talks about bringing in other countries. I think that doesn't mean that Japan has an interest in bringing China anytime soon. But, perhaps other Asian countries, perhaps Latin American countries. And what I'm most interested in is can the EU and the CPTPP forge a dialogue to try to find a docking mechanism, perhaps by focusing on some issues like supply chain resilience, trade liberalization, trade facilitation, in a way in which begins to speak about, a coalition of countries that still want rules-based trade and that could actually offer that safe harbor when the U.S. is turning more protectionist.
Mireya, in terms of the way in which some of these countries have been going about negotiations, if you take the likes of the U.S.'s largest trading partners, Mexico, Canada, China, they've all been going in different tracks in a way. What is your sense of the negotiation tactics that Japan has been using so far? How effective has it been?
Well, I would say that nobody really has gotten a good deal from the Trump administration. So we have to keep that in mind when we evaluate Japan's negotiation strategy. With China, what we got was a very, very negative tariff escalation from both sides, and then a very tentative truce, which we actually don't know the terms, and really is about bringing things back to where they were and begin to think about a potential trade deal. But none of that has been settled. With the UK, it's a very it's a framework agreement, and the 10% tariff stays, and most of the very significant issues have yet to be negotiated. With Vietnam, that 20% tariff is still very high, and the potential 40% tariff on transshipped goods, that could be really problematic for Vietnam going forward, depending on how that transshipment issue is fleshed out. So I want to bring that up because I think that no one has been able to get a good deal from the Trump administration. Now, having said that, what is distinctive about Japan's approach to trade negotiations? One is that they started, I think, with a very maximalist position. They said that they wanted Japan to be exempted from all tariffs that the Trump administration rolled out in the past 3 months. That is a 10% universal tariff, that is a 24% reciprocal tariff, and that is the tariffs on steel and automobiles. Now, I believe that, you start a negotiation and you want to achieve, a lot. So you start with ambitious goals, but that seemed to be an overreach. I think it was very clear from the get-go that, eliminating completely those tariffs was never in the cards. So I think that reckoning perhaps took a little long for Japan to factor in. And my sense is that now they're perhaps thinking that a reduction in the auto tariffs would be a good negotiation outcome. Not that the Trump administration has given them, I think, a green light on anything like that. But the negotiation of a tariff rate quota on autos, I think, would be a primary goal for the Japanese side. Now, the other negotiation tactic that Japan has used is to think about, well, let's not just focus on rise
Mireya,
or auto.
I'm sorry, I'm going to have to cut you off there. Thank you so much for sharing your analysis with us, Mireya Solís of the Brookings Institution. Let's take a look at how futures are shaping up in the Asia-Pacific. Looks like it's going to be a down day. Markets open next. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens. And of course, Haidi, it's really this lack of clarity when it comes to tariff policy out of the U.S., just kicking the can down the road to August 1st at this point.
Yeah, sort of, are you a glass half full or empty person because there's something in it in terms of, or do you focus on the fact that there has been an extension, a bit more time for these talks to be ongoing, or the fact that he's now again touted the 25% tariffs on key trading partners, including the likes of Japan and South Korea? We're also hearing ongoing commentary, right? We know that there is this ongoing dinner between President Trump and Benjamin Netanyahu, and on top of regional geopolitics, he's also been commenting on the state of play when it comes to trade. At the moment, we're hearing him talk about the deal with India, saying, President Trump, that is saying we're close to making a deal with India. Some tariffs would adjust, quote, a little bit. India, on its side, has said that it's made its best offer to the U.S. when it comes to trade. Officials saying that it's now in the court of President Trump, Avril.
It's really interesting you mentioned that glass half full of empty, depending on how you're looking at things, because we were expecting pretty steep declines on Japanese stocks to track the weakness in the yen, which of course bounced towards the 146 handle against the greenback in the past day. But looking at this reaction in Japanese equities, lower, but really not by much. We are still seeing that pressure on JGBs, though, particularly on the long end. And it's worth noting here that Japanese stocks have been managing to recoup those losses from the April lows, but certainly a lot of uncertainty given how negotiators just haven't been able to get those deals across the line. In terms of South Korea, let's take a look at how markets there are shaping up. Of course, the focus today is not just the macroeconomic picture and tariffs, but also Samsung, which clearly is reeling from U.S. policy. We see that sharp drop in profit from a year ago and also missing the mark. So that reaction you're seeing is interesting when it comes to chip stocks climbing about 1% at the moment, with the stock of Samsung firming up, Haidi.
Yeah, take a look at what we're watching when it comes to the first wave of promised tariff letters from President Trump, including a threat of 25% rates on goods imported from Japan and South Korea. Our Chief North Asia correspondent Stephen Engel joins us now for more. And Steve, we've known that the US and Japan seemed very far apart on these talks. Does the extension kind of really give much hope that some sort of framework, even if not an actual traditional trade deal, could be reached?
Well, there's a couple of ways you can really look at this. You can say that this is Donald Trump picking on its closest ally in Asia-Pacific, Japan, as well as South Korea as well, both of them getting a 25% tariff. Yes, there is a reprieve until August 1st, and that's where you can look at it as a positive, because both of these countries have their political considerations right now. We have an upper house election in Japan at the end of this month. Ishiba, so far, the prime minister, has been reluctant to make too many concessions, in particular on the automobile industry, which is the biggest export product, obviously, to the United States and also one of the biggest industries in Japan. So it's politically sensitive. And then with South Korea, of course, the new president, Lee, has been in office only a few weeks, really, and they are probably have not made as many concessions as the White House would like as well. So maybe this gives them about 3 weeks to come up with their own position, because the negotiations haven't really gone that far. In particular with Japan, their top negotiator has traveled to Washington at least 7 times to negotiate with Scott Bessent and with Howard Lutnick, but it really hasn't moved the bar or the needle much at all. So maybe this is a way of kind of stimulating more fruitful negotiations between now and August 1st. So it's a wild day, obviously, with a number of different tariff announcements by the White House against a number of key trading partners, including, of course, in the last few minutes where Donald Trump speaking at that dinner with Netanyahu, essentially saying that they're close to a deal with India.
As you talk about these number of tariff announcements, it's interesting how some of these Southeast Asian countries in particular, they've been hit with, these higher 30-40% rates. I mean, How does that inform what we should be watching out for the next couple of weeks in a way, Steve?
Well, I think we need to be watching out for what kind of negotiations and who gets FaceTime with the key parties in Washington as far as negotiating down these tariffs. Look at Thailand. 36% was the initial reciprocal tariff. It was slapped again today with 36%. So no movement despite talks obviously aimed at mitigating those tariffs. We're looking at some of these other emerging market tariff rates announced by the Trump administration today. Cambodia came down from 49 to 36. But we're looking at Malaysia, 25%, Laos, 40%, Myanmar, 40%, Indonesia, the same as the reciprocal tariff of 32%. So, there's room to move, obviously. Maybe this is, again, an impetus for talks to escalate in earnest for those nations, if they so desire, to get those tariff rates down. I'm looking at a quote from Donald Trump within the last 35 minutes or so, when asked about whether August 1st, and this is why we're really looking at market volatility, because on the one hand, Trump says one thing and he also says another in the same sentence. He was asked about whether that August 1st deadline was firm, and again, that's something these trading partners who are about to engage in escalated dialogue need to know. He said, I would say firm, but not 100% firm. So not a clear message. If they call up and they say, we'd like to do something a different way, we're going to be open to that. But essentially, that's the way it is right now.
Our Chief North Asia correspondent, Stephen Engel. There, let's bring in for the market's perspective, Skyler Weinand, who's the CEO of Regan Capital. Skyler, great to have you with us. And I think Steve sort of hit the nail on the head, right? The president can say multiple things at the same time. Perhaps that is part of kind of the strategy of giving the market some hope to hang on to. Do you think this meaningfully changes the fact that we've seen the reaction function to tariff volatility just increasingly fade in recent weeks?
Yeah, look at the market today. The market's down a little, but U.S. stock market's up 7% for the year. So every day that actually goes by, the volatility from that initial liberation day recedes. And as time goes by, it's just human nature, right? So as time goes by, it has less and less of an effect on the market. And so the market today is pricing in those tariffs that we just saw on the screen, 30 to 40% roughly. And any lower tariff amount would obviously be very beneficial for the Asian stock market.
Scott, a function of how good that US rally looks is also what we've seen with the US dollar, right? If you take that out of the equation, are there better international options?
Yeah, so you could look at Europe for sure, and where PE levels are much lower than the United States, and interest rates have been coming down precipitously. A lot of European countries and the euro have been cutting. So you have this stimulus coming in from lower interest rates. You have a better value in terms of PE. All of those add up to potentially better opportunities in Europe. Looking to Asia, it's a little bit more difficult, right? You have Japanese inflation with Japanese wage deceleration. Market's not doing great. But yeah, it's the decline of the dollar has definitely been beneficial internationally. But as other countries have been cutting interest rates and have lower interest rates, and the US interest rates stay high, especially on the long end, I would anticipate that $97, that 10 to 15% dollar decline that we've seen to reverse.
Why though? Because we've seen in the past couple of months, the greenback hasn't been benefiting from yield differentials.
Yeah, and part of that was given Liberation Day, given the administration saying, hey, basically your money's no good here. you had a section, I think it was 899, that just got stripped out, that was going to potentially penalize foreign investment. So it's just a matter of time before these carry trades set back in and make U.S. Treasuries attractive again and accelerate the value of the dollar. So you are still dealing with the aftershocks of the administration saying, hey, get out of here. That's been receding, and you know, stock market's gone crazy. I think interest rates potentially pulling investors back into U.S. Treasuries will happen. Rates may need to go a little bit higher in order for that to happen, and in order for the dollar to strengthen again.
Yeah, it's interesting because I think you believe that the next move by the Fed might actually be a hike. Yep. What are you watching for that would inform that maybe come September in terms of the aftershocks from U.S. policy into inflation, into growth?
Financial conditions are as easy today as they were 3 years ago. Basically, right when the Fed started hiking interest rates. You have the highest stock market cap in the U.S. in history. You have consumer balance sheets flush with cash, U.S. net wealth at $170 trillion, U.S. corporations utilizing the least amount of leverage in history. So you add all that up, and you have a tremendous amount of dry powder for the market to keep going, okay? Look at the most recent jobs report, very, very bullish for continued growth, but inflation's still relatively high. And the U.S. government just passed a $3 trillion deficit bill, totally unnecessary spending. We're not in war currently, hoping that we're going to grow ourselves out of it. So all of these things add up to hypersonic growth and potential inflation that the Fed may have to walk back the 100 basis points of cuts that they put into effect last fall.
Really interesting perspective. Skyler, thank you so much. Skyler Weinand is CIO of Regan Capital. More ahead on the Asia trade. This is Bloomberg. Let's take a look at the market reaction against the backdrop of geopolitical concerns. We are seeing now Samsung Electronics reversing lower from a gain of as much as 1% earlier on in the session. SK Hynix, the standout at the moment. For more, let's get analysis with Tom Kang, Research Director at Counterpoint. Tom, there are so many layers that we need to unpack, not just these operating profit misses, but what we're seeing in terms of tariffs as well. But let's just get your reaction first and foremost. The miss, you were expecting it to be bad for Samsung earnings, but this bad, I mean, how concerning is that for you when you look at Samsung?
So the revenue came in as expected, flat compared to same period last year, but the profits were almost half of last year. We knew profits were not going to be good, but this was a bit worse than we thought. It looks like the foundry business or the LSI business are continuing to create losses, but it looks like the rebound in memory prices has not helped Samsung. So it looks like Samsung really needs to get into the HBM market fast to recover.
Yeah, to your point, I think it's about this inability for them to supply the chips that NVIDIA wants. But what's your sense of, I mean, can we expect a sort of bounce going forward from here on out, given the tariff backdrop that kind of proves to be a distraction?
Right. So the tariff announcements might affect Samsung. They have consumer electronics business and they have smartphone businesses, but most of the exports are not happening directly from Korea. It's happening from Vietnam to the US or other regions to the US. So right now, what has been announced in tariffs will not affect Samsung directly and immediately. But like you just said, the concerns about the memory business, will they get into NVIDIA or not? That's really a question mark. We know that Samsung is really trying hard, and they have some success in AMD, Broadcom, and other players, but they really need to get into NVIDIA. And there seems to be a problem on the logic die and Samsung's HBM memory, and so this has to be synced correctly, and it's ongoing. We hoped it would happen this quarter, but it looks like it's going to happen maybe in the third quarter or maybe the fourth quarter. So that is a big question mark, and we don't see any clear clarification on whether they will clear the NVIDIA qualification tests.
But that really is what it comes down to, right? The drag, you're expecting it to continue as long as we don't have much meaningful progress on accreditation.
Correct. So it looks like, in the worst case, Samsung might totally miss this year and start supplying next year with the next generation HBM, which is probably will have better chances to win in NVIDIA. So we will also have to think about the worst case that might happen.
How hard would that climb back be to try and supersede Hynix, particularly as the tariff side, the China side, really looks to affect Samsung more than SK?
So it looks like this current generation HBM, the HBM3E, is really dominated by SK Hynix. SK Hynix, we think they're taking about 70% market share of the total market, and it's continuing. But if we go to the next generation HBM next year, HBM4, we think Samsung has a better chance. So Samsung is really going to try hard, but there's a mismatch here in what Samsung has developed versus what NVIDIA already has. So we have to acknowledge that SK Hynix has really built its position well as the first mover advantage in NVIDIA.
Tom, of course, you were already alluding to some of this earlier, but what's your sense of potentially these U.S. chip curb risks impact on sales, even if Samsung can, come through with an HBM that NVIDIA can use? So the tariff issues are really kind of a potential risk, but we think that the U.S. market, it's more of how they will, how crucial the parts are to the U.S. business. So in the case of AI-related industries, we think the impact will be less.
and it will be more of a consumer goods type kind of movement. So we think chipsets will be affected a bit less than consumer goods like TVs, refrigerators, white goods, and smartphones. So that tariff issue, we think there could be a chance of a deal, and it could kind of be exempted. And there will be other routes for Samsung to deliver its chipsets if it passes the qualification at NVIDIA.
What are you expecting in terms of spending on tech upgrades then in CapEx? How is it going to be focusing perhaps more on that versus enhancing production capacity?
So we think that the global economy overall is stable, even though there are tariff issues. The AI push is really creating innovation in all sorts of fields, and investments are very active. So this type of innovation that is happening in all types of products. So we're seeing AI built into refrigerators, AI built into TVs, AI built into air conditioners. So this type of new innovation will kind of stimulate demand. But again, if the tariff goes through the roof, then it will go down. But our observation is that the U.S. and other countries are coming to terms, and there are chances of lowering tariff. So we think, the innovation that's happening in the industry overall is good for stimulating economies, especially around the U.S.
Tom, great to get your insights. Thanks so much for taking the time to speak to us. Tom Kang is Research Director at Counterpoint. Now to the latest from the corporate front. Epic Games has settled its antitrust case against Samsung Electronics. The suit alleged that the electronics giant conspired with Alphabet's Google to block rival app marketplaces through default settings on Samsung mobile devices. The Fortnite maker says it's grateful that Samsung will address its concerns, but didn't elaborate further. Bloomberg has learned that Apple's top executive in charge of AI models is leaving the company for Meta. Sources say Ro-Ming Pang is joining Meta's new super intelligence team after being offered a package worth tens of millions of dollars per year. Pang joined Apple from Alphabet in 2021 and had been running a roughly 100-person team responsible for the company's large language models. Capgemini has agreed to buy IT outsourcing firm WNS in a $3.3 billion cash deal to boost its AI exposure. Capgemini shares fell in Paris on concerns that AI tools will undermine the consulting firm's existing services. It expects the deal will close by the end of the year and deliver a 4% boost to its 2026 earnings per share. Haidi.
Take a look, Avril, when it comes to Korean assets responding to some of the tariff uncertainty. We've also had Samsung numbers coming through, which, given how heavily weighted that stock is really playing out across equities. The Kospi is actually seeing upside of 1.3%. The issue here has been the volatility that we've seen in other assets, including FX, right? The won plunging as much as over 1%, the lowest in about 2 weeks after President Trump announced a trade levy of 25% on South Korea, as well as others, including the likes of Japan, really ratcheting up trade tensions again for one of the key trading partners with the US. Now we're hearing from South Korea that they'll monitor financial market volatility on these US tariff movements. They'll closely monitor the markets as well as the economy on the tariff movements. This is according to South Korea's finance ministries making a statement this morning. South Korea will take swift, bold steps on volatility if needed, more or less in line with some of the commentary that we see whenever there is quite a lot of fluctuation when it comes to, in particular, movements in the won. So this comes as we've seen appetite for emerging market assets already looking pretty tepid at the start of this week, with the threat of tariffs on a block of developing nations, the BRICS nations, and nations seen as being sort of taking anti-American positions by President Trump. And that has seen a bit of a recovery rally in the US dollar against other global currencies. More ahead on the Asia trade. This is Bloomberg.
Let's take a look at how some of these auto stocks are faring in Japan and South Korea, of course. Despite the 25% tariffs for both countries, we're still not hearing about sectoral levies. So these are the stocks that are in focus. Of course, for Nissan, there's a separate sort of narrative given how it's looking to revamp and enhance financing. But it's really against this backdrop of Japan talking about how, they're not on the same page still with the U.S. on some elements, but that Ishiba is still seeking a trade deal as soon as possible with the U.S. And I think, Haidi, also there's a bit of a law of diminishing returns when it comes to Trump's strategy of using these tariff threats. The longer they drag out, the less they actually have an impact on investors, maybe, and market concerns, Haidi.
Yeah, whether that's sort of by design or not is an interesting question, right? Take a look at how we're trading when it comes to European assets. A bit of downside there, risk aversion when it comes to equities. This after European stocks did rise as those gains for some of those financials and banks really managed in the previous session to offset some of those trade worries. But sentiment ultimately at the moment getting a hit by the comments on the tariffs. We're expecting volatility, but the other thing we're watching for is the edging higher when it comes to euro versus the dollar on that report that a 10% tariff deal has been offered for the EU. This is Bloomberg.
We made a deal with China. We made a deal. We're close to making a deal with India. Others we met with, and we don't think we're going to be able to make a deal. So we just send them a letter. If you want to play ball, you have to. This is what you have to pay.
President Trump, they're talking earlier this hour about the trade negotiations with countries. And of course, in the past couple of minutes, we've been hearing from the Prime Minister of Japan about how it's regrettable that the U.S. has announced higher tariff rates, but that this August 1st deadline sort of becomes a de facto extension for negotiations. So maybe a bit of reprieve. We're seeing that reaction in markets as well. The Nikkei up about 0.2%. But of course, this is all coming against the backdrop of the lack of certainty when it comes to the tariff path. For more, we're joined by our Chief North Asia correspondent, Stephen Engel. Steve, I think this has been characterized by some as kicking the can down the road. What is the tactic likely to be for the Japanese side, given how this is a deadline that's only 3 weeks away? Does it materially change things?
Yeah, that's right. I mean, it buys some time again, another 3 weeks till August 1st, essentially. And it also allows Japan to get past their upper house elections, which will be held later this month. So there's a lot of political uncertainty in Japan with Prime Minister Ishiba. Obviously does not want to overpledge and make certain concessions that will damage his party in the polls. So again, and similar thing in South Korea as well, where you have a president who's only weeks into the job. So there's some political uncertainty there, as well as President Lee tries to establish his mandate without giving up too much, of course, to the United States. But Japan and South Korea are in particular vulnerability because not only were they issued with that 25% tariffs, which for Japan was 1 percentage point higher than the initial April 2nd reciprocal tariff, they have to face also sectoral tariffs on top of that of 25% for automobiles and 50% for steel and aluminum. So it gets quite costly for the Japanese economy. Ishiba is saying he regrets this morning the U.S. announcing the higher tariff rates, also saying they will continue to protect Japan's national interests. This is a de facto extension, he said, for negotiations. So he's alluding to that fact that this is a 3-week sort of not reprieve yet because the threats are still there, but more time to negotiate. We do know that his chief negotiator has been, that's Akazawa-san. He has been to Washington 7 times over the last few weeks trying to negotiate a deal with Scott Bessent and also, of course, Howard Lutnick, but months of talks have yielded little results. Whether 3 more weeks will allow Japan to strike a deal to their liking, it's yet to be seen, because Donald Trump wrote to Ishiba saying the U.S. must move away away from, quote, long-term and very persistent trade deficits caused by Japan's tariff and non-tariff policies and trade barriers. He went on to say in that letter to Prime Minister Ishiba, there will be no tariff if Japan or its companies decide to build and make products in the United States. That pledge or that reality is not going to be necessarily come to fruition in 3 weeks. The pledge might, the reality won't.
It's interesting because we've also not exactly seen a position of backing down from Japan, right? In fact, PM Ishiba saying just in the last few days that Japan will stand firm. They'll be pushing for zero tariffs on autos. Yeah. I know that there's not a great deal of interest when it comes to the offer of taking American rice either. So I do wonder how much room is there for compromise?
Well, that's essentially the position that Ishiba is laying out as he heads towards those upper house elections later this month. Rice has always been a sticking point. Automobiles are probably at the center of this because, again, I think the imports to the United States of Japanese cars is, one of the highest, earning product, obviously, for the Japanese. The United States sees Japan as its fifth biggest import country. So I think the two-way trade, or not the two-way trade, fifth biggest source of U.S. imports was Japan, $148.2 billion in 2024. South Korea, $131.5 billion. So these two nations export a lot of cars to the United States. So those, sectoral tariffs and steel and aluminum tariffs on top of the 25% now, both of them have been slapped with for reciprocal tariffs. It's going to be very difficult for Ishiba to try and find a position that is going to appease Donald Trump when he makes that case that the trade imbalance is too great at this point.
Our Chief North Asia correspondent Stephen Angle there. We'll take a look at our markets of reaction. It's really interesting. If you take a look at the kind of the gains that we're seeing across equity markets, more of the reaction is really being seen across FX. We see that rebound in the dollar against most currencies other than really the euro. We saw the euro benefiting from the report that 10% tariff deal had been offered to the EU. You're seeing dollar yen there at the moment. A little bit of a movement there. Dollar China also a little bit softer, as well as some of that sort of dollar edge strength that we've seen may be starting to wane a little bit. We did see that initial strengthening of the greenback against the basket of peers after the announcement of those proposed tariffs across several countries. Euro dollar, for that being sort of the exception there, up by about 0.3% on the news that 10% deal may have been offered to the EU. We're also watching some of the other sort of risk proxy currencies, including the likes of the Aussie dollar, that could gain depending on how hawkish we continue to see the signalling out of the RBA today, as it is on track for those back-to-back cuts. We could also see that premium rising, trading against the Kiwi as well. More ahead on the Asia trade. This is Bloomberg. Australia's central bank set to deliver its first back-to-back interest rate cut in 6 years on Tuesday amid cooling inflation pressures and US trade policy threats. For more, let's bring our economy reporter, Swati Pandey. And Swati, just before the July 9th deadline was always going to be tricky for the RBA. Now it's sort of been kicked down the road until August 1st. But does it change the metrics or the criteria for the RBA? Are we kind of looking to see perhaps how hawkish they sound in the commentary?
That's right. The commentary is really important. But also today's decision, because we haven't really heard from the RBA since their May meeting. So it's been 7 weeks, 7 week of silence from the RBA. And another thing in their May decision was they had cited the global uncertainty as one of the reasons to step down interest rates. So if that logic still applies, then they would cut today because they want to be a source of certainty and predictability. That was their logic for one of their logics for may cut. So they will probably cut today, but yes, it's the discussion around the future path of rates.
And what are the sort of factors when it comes to the future path that may still look uncertain, other than global trade issues and how that impacts?
So we have a pretty strong labour market in Australia. So unemployment has hovered around that 4.1% number since the start of the year, which is really low by historical standards, which is a reason for them to move slowly. Productivity growth has been a big topic of discussion this year. That is amongst the lowest in the developed world. That is one of the reasons some economists are saying that the cool down in inflation that we have seen may not be sustainable. So if that is true, then the RBA will have to be cautious going down further. Economists are predicting the RBA will pause at 3.35%, so one more rate cut after today, and then a prolonged pause, whereas markets are predicting 3 more rate cuts after today, and the interest rate would be below 3% by February of 2026 if markets are to be believed. So there's a lot of disparity between what economists and markets are predicting. So it will be really interesting to see how Governor Michelle Bullock shapes market expectations and views around the future path.
There's also some institutional significance when it comes to today's decision.
That's right. So there are a couple of things. One is that Jenny Wilkinson took on as Treasury Secretary, so she now has a seat on the board. This will be her first meeting as a board member, and that actually makes the RBA board more women dominant. So 6 women board members versus 3 of the 9 total. So that's quite interesting. The chair of the board is, of course, the Governor Michelle Bullock. Another interesting thing that's on the agenda today is unattributed votes. So the RBA currently does not vote on the rate decision. The members do not vote on the rate decision. They come to a consensus. Now, the review of the RBA, which happened a couple of years ago, recommended that the RBA board members should vote and they should disclose the unattributed vote count. So that's on the agenda at today's meeting. It's possible that they would disclose that unattributed vote today, or they would just discuss that we will start doing it from later this month or from later this year or next month or so on. So it's not clear what they will do with it, but that's definitely on the agenda too.
Bloomberg's Paddy Pandy there. And of course, trade is one of those elements that continues to cloud the outlook for global central banks, including the RBA. And these negotiations between the US and China ongoing really fall on, in terms of one of the key factors being, of course, the battle over access to rare earth minerals. Well, the surging demand for critical minerals is reshaping global dynamics, China's dominance posing a challenge for Western nations. The US and EU are trying to catch up and reduce their reliance on Beijing. And Australia, the biggest producer of rare earths outside of China, wants to leverage its role as a potential alternative. Prime Minister Anthony Albanese has pledged to create a critical minerals reserve, seeking to secure supplies for the materials crucial for clean energy, smartphones and military technology, amongst other applications. Let's bring now Vlado Vivoda, who's the Industry Fellow at the University of Queensland Sustainable Minerals Institute. Vlado, really great to have you with us. And, we talk a lot about the opportunity for Australia, the access that there is. I do wonder if you can kind of set the scene in terms of meaningfully, substantively, how much access Australia has at the moment and what would be required to get to scale and meaningful levels of production.
Look, Australia holds some of the world's richest reserves of critical minerals, including nickel, lithium, indeed rare earths, and others too. Yet it continues to operate mainly as an upstream supplier. So the country now faces a defining choice in a way: remain a raw material exporter, or strategically invest in downstream processing and advanced manufacturing. So I think it's a once-in-a-generation opportunity for the country, but it requires quite bold and long-term decisions that won't necessarily make economic sense in the short term. But I think that some of the decisions already taken by the government are in that direction, including the national critical minerals stockpile. But more needs to be done in this space.
What needs to be done to break Beijing's stranglehold, which of course has been building? It's interesting because this is not a new kind of development, right? We know that this has kind of been the crown jewel for China for decades. So what does Australia need to do to get to that point? Because at the moment there's only perhaps one or two players that are even close to having that meaningful level of strategic competition.
Indeed. So China isn't just any player; it's the dominant force in the processing and refining of critical minerals. So that's the real choke point here. So breaking this dominance will take years of strategic investment. It will take a lot of coordination between governments, and it will take very careful navigation of various hurdles along the way. So Australia is only beginning to build that capacity. But what it needs is strategic investment in processing, refining at home, midstream infrastructure, because all the mining in the world won't deliver real sovereignty or supply chain security or diversification away from China. What's required really is that push into midstream, into processing and refining at home. And advanced manufacturing as well, integrating those supply chains away from actually reliance on China. Because at the moment, what we have is a lot of Australian critical minerals heading to China, where they're processed and then used in the production of advanced tech, and then perhaps exported to the United States. So if the United States and Australia are really serious about reducing their dependence on China, it's a matter of actually supporting each other and supporting the United States, supporting Australia in making those strategic decisions towards establishing a greater industrial base at home, advanced manufacturing, processing, refining of critical minerals, so that they don't have to go to China and then via China into the US. So that's really the whole game that's being played here, I think.
Vlado, I wanted to pick up on that last point because there's been a lot of criticism, certainly from within the industry, from Aluka, for example, saying it's all well and good that we have these resources, but what needs to be done in terms of a complete supply chain, right, in terms of, as you say, the processing, the manufacturing end, and not just shipping them off to offshore?
Look, I'll give you an example of what's happened in Australia over the past year or two. It's been, a lot of nickel mines, for example, have gone into care and maintenance. And this is because of China's dominance of this market, where it's literally by pushing down the price, it's made these projects uneconomic, unviable. So I think that push towards creating a stockpile in terms of strategic protection of certain mining and processing and refining projects that are deemed essential for national and economic security, if you like, for Australia and its allies. I think those decisions need to be made, because otherwise, if we just leave it to the markets, we're not going to be left out with any of the nickel or rare earths at all. These are strategic decisions, and they need to be made not just with not having the likes of Iluka on the table, but together. What sort of mechanisms can be developed and put in place so that rare earth producers, for example, are supported, are strategically supported, are protected, so they can actually establish a foothold in the entire supply chain and are not really at the mercy of China, are just beating them out of the market.
Vlado, I wonder if you could weigh in on the extent in which you've actually been seeing a shift, if any, from the US approach to this, and perhaps how that's trickling through into Australia's considerations compared to the Biden administration. What are we seeing in the current Trump administration? Sure.
Look, I think that the critical minerals policy from the US perspective has been very consistent. It's not much has changed. Critical minerals have not been included in any of the tariffs discussion. They've been excluded from that. So I actually think there's a lot of consistency and bipartisanship, in fact, in the US approach to critical minerals. And in fact, the Inflation Reduction Act flowing into the America First policy, again, there's a lot of consistency there. Yes, certain mechanics have changed, but it's all about reshoring, bringing it back home, building supply chains at home, bringing that industrial base back to America. And I think in Australia, we're seeing a bit of that, copying what the Americans are doing exactly, word to word. It's not going to work in Australia. It's a very different country, different economy. But how can we integrate the two economies to support each other, right? To find those synergies. I think there's a lot of space, a lot of opportunity for that at the moment. But going back to the US policy, and that's a great question, really, I think there's been a lot of consistency from Trump 1 to Biden to Trump 2 in terms of critical minerals, at least.
Vlado, really great to have you with us. Vlado Vivoda, who's an industry fellow at the Sustainable Minerals Institute. We do have much more on Australia ahead every Tuesday at 10:40 a.m. if you're watching in Sydney, 8:40 a.m. in Hong Kong. Plus, you can always tune into the Bloomberg Australia podcast as well, which delves into the biggest stories shaping the country's role in global business. You can find that on Apple, Spotify or Bloomberg.com. Much more ahead on the Asia Trade. This is Bloomberg.
You're watching the Asia Trade, and Bloomberg has learned that China is considering doubling a channel that local investors use to buy bonds overseas. It's a major step in its efforts to loosen restrictions on financial flows. Bloomberg Shanghai Bureau Chief Charlie Zhu joins us now. So Charlie, of course, there seems to be a bit of a geopolitical aspect to all this, but give us first and foremost the details of this program.
Sure. As you know, so China's Southbound Bond Connect program was first launched in 2021 with a daily quota of 500 billion yuan. And as you mentioned just now, we're hearing that the quota is going to be double to 1 trillion yuan, and that shows that it's widely viewed as a part of steps to loosen restrictions on China's cross-border capital control, and also expanding the use of the Chinese currency. What we're hearing is the quota will be given to extended to non-banking financial institutions, including mutual funds, and and they can use the quota to invest in the offshore yuan bond market, so-called dim sum bond market in Hong Kong, and also those some of those dollar-denominated fixed income products are listed on Hong Kong Stock Exchange. Yeah.
Charlie, as you sort of touched on, is this all about sort of international appeal for the yuan, given we've had some criticism when it comes to whether it could ever become a viable option next to the greenback?
Yes, you're right. China has, for years trying to, so-called liberalize its, capital account. The yuan is not convertible, fully convertible on the capital account, and the move, follows a flurry of efforts to ease the control of capital control. If you remember, last month in Shanghai at the annual Lujiazui Forum, the PBOC Governor Pan Gongsheng announced a series of measures to loosen the control, including an expansion of a so-called QDII program that allow qualified financial institutions to invest overseas. And why these are happening now? And one of the key reasons is the weakness of the U.S. dollar. The dollar index has fallen sharply this year amid concerns about the fiscal health of the U.S. And the latest move in China shows how comfortable the Chinese policymakers are with their exchange rate. But for years, China is trying to boost the appeal of the yuan to the international investors, but there's a long way off. The dollar is still the dominant currency in the investment world.
Bloomberg Shanghai Bureau Chief Charlie Zhu there, and that's one of the stories that we'll be watching, of course, when we get into the start of trading across China and Greater China as well. We're also watching for some trade implications with the news that Treasury Secretary Bessent expecting to meet with his Chinese counterpart over the next few weeks. Trade continues to dominate, but we're also watching some of those chip stocks trading across Asia, including in Taiwan, after that first profit drop for Samsung since 2023.